Let's talk to Ryan Littlestone, a trader and analyst at ForexFlow.live. Very good morning to you, young Ryan.
Good morning, Nick.
Right, we have one slide you have sent us. Let's get that up on the screen. Right, what is this? And more importantly, what are your thoughts?
Right, this is a big pair in focus at the moment, USD CNH, Chinese yuan. There's a lot of focus, it's obviously because of the trade war going on between US and China. It's starting to have a big effect, and a lot of the market is watching a big level in this pair at the 7 mark.
Yeah.
It's a big level because it's a level that China and their central bank, the PBOC, have said they're going to come out and defend. But the market recently, the last few weeks, has been pushing the envelope because it's rallied, as you can see, all the way up to sort of 697 in this pair. There's also a very large barrier said to be sitting at this 7 level. And again, if it's related to the PBOC, these guys, if they want to defend the level, they'll throw their weight behind it. And this is not a central bank that you want to trade against.
Right, so this is a key chart point. I've obviously seen the headlines, devaluation because of this trade war. Which way would you position yourself at this sort of key level?
Well, I'm actually positioning myself short. I've been shorting this from 6.95, basically every big figure up. Originally, I started it a couple of months ago, and it dropped back down into sort of 6.82, 6.85, and I took some position off there. But I'm happy to play this level up to the 7 mark. Now, as we know, there's no free lunches in this game. But if you're going to be on one side, I'm going to be on the side of the PBOC. Yeah. Because if they are going to defend this level, then they've got the potential to knock it all the way back down to 680, 670 if they want to do so.
Right.
As recently as last Friday, we had Chinese officials coming out to say they were going to look at defending this level, or at least slow any volatile moves towards there, which obviously doesn't necessarily make it a red line there, but as I say, I'd rather be with the side of these guys and against them. But that's not to say they won't let it trade through the level, and they could let it clear out all the speculators all the way through to 7.10 before they step in and knock it back down again. But it's a trade I'm in, it's a trade I'm looking at, and it's going to be fun to watch.
Understood. And finally, anything obvious in any other currency pairs?
Just basically, we're looking at the pound again. The markets have been very volatile. Last week the pound went one way and that was down. A lack of Brexit news or the Brexit meter swinging to the negative side of things again. That's hit the pound. But we're seeing a lot of risk off. Obviously, US stocks, a lot of eyes on those at the moment. Is this still a correction, or is this something bigger? The fearmongers are coming out the woodwork, and we're seeing now. We're running into more safer assets. Treasury yields were rising, a sign of bonds being sold off, and now we're seeing those yields gain as a bit more of a safety trade. And the dollar in some currencies is looking strong because economically it's one of the best majors in town. But on the other hand, you're seeing it weaken elsewhere. So it's a very messy picture at the moment, and a lot of focus is, as I say, on these stock levels in the States and seeing what it actually means for markets.
Yeah. On that note, Ryan, we've run out of time. That's Ryan Littlestone. Thank you.
Cheers.